Just days ago, Lemonade stock pulled back over 25%, even if they crushed Q4 earnings. Today, we are breaking down why stock pulled back so much, why they are tanking despite the revenue beat, the new 2027 profitability timeline as well, and major reasons investors still trust this team. Before we hit the numbers, let's talk about who is steering this ship. Most people know Lemonade as AI insurance company, but they forget it was co-founded by Shai Wininger. If that name sounds familiar, it's because Shai is one of co-founders of Fiverr company. He didn't just work there, he helped build it into a global multi-billion dollar marketplace and took it through a successful IPO. Why does this matter for your portfolio today? First of all, it's a proven scale. He's already seen the hypergrowth movie. He knows how to scale tech platform to millions of users globally. Point number two, he is still in the game. He is still the president and major shareholder, not just a hired gun. Point number three is the vision. She didn't start Lemonade because he wanted to sell insurance. He started it because he saw an opportunity to apply the same marketplace efficiency he used at Fiverr to at 5 trillion stagnant industry. Now let's take a look into the actual performance. We just got Q4 2025 numbers, and we see that revenue is 228 million, a massive 53% jump year over year. EPS loss is minus 29 cents, which is crushed analyst expectations of minus 0.41. They were expecting that the loss will be much, much higher. And the loss ratio dropped up to 53%, the lowest we ever have seen, and it shows that AI is finally outperforming human underwriters. So you can ask, if everything is so well, why they are dropping about 25%? Well, first of all, market never was rational, and in the short term, it's a voting machine. And second of all, expectations for the future earnings is not what analysts were expecting. So the thing is that there are two scenarios, and bears just started to be more cautious, probably, yeah, in my opinion. So for the bull case, we see that operating leverage revenue grew about 53%, and operating expenses grew about 24%. These are massive numbers. And the company is just, we can say, a hyper growth company. The customer count just hit 3 million, up to 23% year over year growth. And the pet insurance growth was massive as well. And the last point is that the company is still run by the founder who has successfully built a multi billion dollar company before. The bear cases are legit as well, and probably the main point is that the profitability delay. The Lemonade mentioned that they will be still concentrating on the growth, not on the profitability. And the new promised land is now delayed for 2027 now. So some investors definitely don't want to wait so long because it's from 2020, I think, how Lemonade operates after IPO, and they're still not profitable. But to be honest, with this momentum of growth, they should not rush to get the profitability. Don't think that they're not making money. They're free cash flow positive, so they're still making money. But net income is negative yet, yeah. And 2027, in my opinion, is fine. They will become profitable in 2 years. I'm really okay with that. The next point is short interest. It remains in about 16-18%. It's a massive amount. And that's why the stock is so volatile. You cannot predict it very well where it will be moving overall. And the point number three is that the traditional giants like Geico are finally rolling out a competing AI tool. But to be honest, these giants are so slow that they will not be even near for a while, I think, or maybe even ever. So that's what I actually like about Lemonade. They are flexible, they are adapting fast, and they are working really effective. So if we will dive into the numbers, we see that the growth is excellent during the years. Yeah, of course, in 2018, when they just had the IPO, the growth was massive. But even now, the growth over 40% is really great. And they still are concentrating on the growth. Just a reminder, yeah. They're not concentrating on the profitability yet. If we will take a look into the net income, we see that the net income was dropping for a while, but now they are becoming positive in the percentage growth, and they promise to become positive in 2027 in the numbers growth as well. If you see Here in the chart, we see how the net income was like going lower and lower, but now they are starting to go up. So basically, 2027 become profitable works for me. It's a hyper growth company and it's really fine for me. Of course, to think I don't like they're diluting shareholders, but it's really okay when you're at this stage of growth. So I'm not watching into that too much. Just want to see that it would be not like massive growth of stocks like twice or like 50% or 20%. It's just like few percents per year. Yeah. And take a look to the total assets to total liabilities. Assets are much higher, like 50% higher. Yeah. And of course, the growth of assets is slowing down and liabilities are growing up. But when they will start to become profitable, probably they will start to slow down liabilities as well. They now are oriented to the hyper growth. So I understand why the liabilities are growing faster. But with the proper management, I don't believe that liabilities will become higher than assets ever. And if we'll dive in into free cash flow, we see that they are still negative, but the number is becoming much smaller. And if we will take a look into the quarterly, we see that the last 3 quarters free cash flow was positive. And I believe the trend will stay the same. I believe that they will become free cash flow positive this year. If we'll dive in into the valuations, we see that P and forward P is negative because they're not planning to become profitable until 2027. This number will be negative. It's normal, yeah. And price to free cash flow is negative as well, but I see that the free cash flow will become positive this year, in my opinion at least. But if we'll dive in into EPS this year, the growth was 23%. Next year, they plan to have growth 58%. It's great number. It's a hyper growth. And EPS next 3 5 years will be between 21 to 10. So in 5 years, they will become slower, definitely. But I don't believe we will see the number 9%. I believe it will be about 15 maybe. So this is really great in my opinion. And price to sales ratio is 6 and 8. It's kind of high, but for this growth of 58%, it's okay. It's not so bad. It's really good one, yeah. And just take a look. They don't have any debt. This is really good for the growth company. They are trying to manage their balance sheet so well that they even don't doesn't have debt. So I love that a lot. Let's take a look what analysts think. Like the low case is 17, which is not possible in my opinion at all with this growth. And the base scenario is 184, and the high case is 650, which is too high in my opinion. We can see it maybe in 300, but 600 is too high. But the base scenario is really like great, I think. If we will have 255% growth in the next 5 years, it's really a great scenario. Yeah, basically my scenario in base case is about 150. It can go 180 easy. And if we go about the bull scenario, my scenario is about 320, 340, something like that. But if we'll take a look into the targets for this year, the high is 85, which is really positive. It can give you 55% growth just in 1 year. I don't believe it will go to 33, but this scenario is possible as well. But in my opinion, price between 58 and 85 is much more realistic. But with this, of course, with this environment, with wars and everything can happen. So just remember, this is not financial advice. It's just my opinion. And what I like here, analyst recommendation trend, we see that from 2025 November, the amount of sell is decreasing and amount of buys is increasing. This tells me that this is a really good trend. And I don't believe it will change because the company is becoming just stronger. So, yeah, the stock is very volatile. You can expect that the price will go much higher and much lower in few days. But in my opinion, the price below 50 is a buy because the company is really great. I had this stock before when the price was 14 or 15, something like that, and I sold it over 50. Now I really want to buy it again because I see the growth is crazy. If we are concentrating on the long term investing, we don't care that it is a little bit overvalued now. We will get a good return in 5 years. And if the company will continue to perform that way in 5 years, I believe it can even get the price of analysts are saying with the 650. But it's only if they will perform the same way as now. If they will slow down, as I mentioned, for me, the price is about 350, 370. So, yeah, this is just my humble opinion. It's not financial advice. So, what do you think? Is Lemonade a buy or sell? If you like the video, just please hit the like and subscribe. It will help me tremendously. Thank you and keep growing, guys.